It's decision time. Wednesday, the Federal Reserve is getting together to possibly cut rates. Are they going to cut by 25? Are they going to cut by 50? Or are they going to leave rates unchanged? In this video, we're going to break that down. What are the experts saying? What is the market likely to do as a result? And how do you need to prepare for what's ahead? You know the drill, like and subscribe. Give me 10 minutes and let's figure out just what's going on. Now, guys, as we all know, on Wednesday, the Fed's getting together to decide their rate cuts for the month of September. It's pretty much a foregone conclusion that, yes, they are going to cut. 25 basis points seems to be the consensus. However, 50 basis points is on the table. You can see it on your screen. We got a whopping 4% chance that they'll cut by 50, 96% chance they'll cut by 25. I personally think they'll cut by 50. All the pieces are in place for a 50-point cut. That being said, 25 is the likely outcome. Now, whether or not they cut by 25 or 50 doesn't really matter in the long run because we're going to get 75 to 100 basis points of cuts by the end of the year regardless. What is the market going to do as a result? This is the burning question. It's important to note that markets have already priced in 25 basis points of cuts for the most part. What markets are looking at now, what is the guidance going to be from Powell? Is he going to come out dovish? Is he going to come out hawkish? What is his statement going to be? And how does the press conference go? Does he signal that inflation is a problem and the labor market looks like crap? Or does he signal that inflation looks well anchored and the labor market is starting to show cracks, but nothing to worry about? I got Steve Leisman. He's going to break this down. What does he think the markets are going to respond to? 45 seconds. Have a listen.
Where it's situated going in, I think a lot will depend upon the guidance and also this vote. How much unanimity is there for a quarter this time? If there is dissent for a 50, that means there could be bigger cuts coming. And how much concern is there for inflation running above target? We've seen also, Andrew, as you know, a difference in the market reaction to the statement and then the press conference. Big gaps there. So I'm not going to predict it. I think the market has priced in these rate cuts, and now it's waiting really on the edge of its seat today for what the market said, for what the Fed says about the outlook for rates.
So 25 basis points is already baked in. Markets right now looking to see what Powell's guidance will be. Is he dovish? Is he hawkish? How are we looking down the road? Again, very unusual for the Fed to only cut once. Very likely they're going to cut several times. The Fed waits and they wait and they wait. Once the data tells them that they can start bringing rates down, they do so incrementally. Probably going to see 3 rate cuts between now and the end of the year for a total of 75 or 100 basis points of cuts. Now, what if we do get 50? Will the market be happy? Will the market be sad? Will we rip or will we dip? I got Ed Yardeni. He's going to break it down. 30 seconds. Have a listen.
Yeah, well, I think the market's hoping for 25 and we'd be pleasantly surprised by 50 basis points. But 50 basis points really would create a melt-up situation in the market where I think you'd see the market going up too quickly.
50 basis points could result in the market moving up too fast. Is there really such a thing? That being said, it really doesn't matter in the long run. Again, we've got rates coming down over the long term. We could expect a dip. We could expect a rip. It really just depends on what Powell says. What's important for you to understand as an investor is that really the end result is the same. We're going a lot higher. Have a look on your screen. We got TradingView pulled up. We got the altcoin market here in white. We got Bitcoin here in red. So have a look. This is September. It's beginning of September. This is right around when the Fed cut rates. And look at what happened. Bitcoin went higher. Meanwhile, the altcoin market went down. Rate cuts are an increase in liquidity. And we know that the Bitcoin has a strong connection to liquidity. And so what likely happened is that maybe Powell wasn't particularly dovish at the cut, and then markets sold off a little bit, but liquidity started to increase as a result of rates coming down. Bitcoin starts to price that in, the market shakes out the jitters, and then altcoins go up too. So really we're headed for the same place. As rates come lower, as borrowing costs come down, as monetary conditions ease, we have a more bullish market. And central banks all around the world are cutting rates. Have a look at this chart. Love this chart. It shows you the different central banks, and in green are the rate cuts, in red are the rate hikes, and then no color means no movement. We're seeing a rate cutting cycle. You can see it. This was the rate hiking cycle, the bear market. We are now in the rate cutting cycle. This is the bull market. And so central banks all around the world are cutting rates and contributing liquidity to markets. And you can see that here. This shows you all the different central banks that are out there. We got the Fed, People's Bank of China, Bank of Japan, European Central Bank, Bank of England. What do you notice? Liquidity, and lots of it. This is the bull market right here. This is the last bull market, 2021. This is Japan, this is Europe, this is the US, this is Fed, this is China, pumping in liquidity because they are cutting rates. It is time to cut rates. It is time to pump liquidity into markets. This is the bear market. This is where we've been. And where are we going? We're going back here. As central banks cut rates, we're going a lot higher. As central banks cut rates, monetary conditions ease. And this is the GMI Financial Conditions Index. Check it out. We've got a lead here showing us that we're going higher. This is rate cuts. This is the dollar falling. This is financial conditions getting easier. And the ISM goes up as a result. What is the ISM? The ISM is the business cycle indicator. If you're a fan of the channel, you'll know we talk about this a lot. It's very important for alt season. As the ISM goes higher, as the business cycle picks up, altcoins go higher. So this is a chain reaction. This is a chain reaction. It doesn't matter to me what markets do in the short term. It really just doesn't matter. If you've got futures trades, if you've got leverage positions, yes, it matters. If you're a spot holder, if you are a patient, calm, sensible investor, not to say that leverage traders aren't sensible, but if you are a calm, patient spot investor, this doesn't matter to you. What we're seeing is a rate cutting cycle, which is going to result in looser financial conditions, easier financial conditions, which is going to result in altcoins going higher. This is us now. This is where we're going to be. Rate cuts is the beginning of this journey. This is what I want to impart on you. People are worried. Is it going to be a dip? Is it going to be a rip? What are we going to do? The Fed's going to cut rates. Oh my God, I don't know what's going to happen. Doesn't matter what happens. It really doesn't, because we're going in one direction. We're going a lot higher. We're going a lot higher for this reason and for many others. Liquidity is coming. The business cycle is about to expand. Regulatory clarity is coming to the space via the Clarity Bill. We're going to do a video on that later. Keep an eye out for that. There's a lot of catalysts that are going to push this bull market to the moon. I'm very bullish, and you should be too. If you want to find out more reasons why you should be bullish and why I'm very bullish, like and subscribe down below. Stay up to date with the videos we do. We're here to educate you. Leave a comment down below. Let me know if you've liked today's video. Thank you for being here. We'll see you in the next one.